Hi everyone. I hope you all had a good week in the stock market. I think it's been an incredibly interesting week. As always, I have the weekly analysis for you. I'm going to be running through a lot of charts, really just what we are currently seeing in the overall market, maybe some areas that are causing a little bit of concern still. And I'm also going to run through, I think, the most requested charts that I've had through all my social media channels and via my email, etc. So hopefully you get some value from this. But if this is your first time here, or indeed maybe you're a regular, just please pause the video and make sure that you understand that before watching any further. I think the common sense approach would dictate that if you have no clue what you're doing in the stock market, if you are following people blindly, if you are hunting around for charts on social media for the holy grail of trading, it doesn't exist. But what we can do is obviously present you with some ideas. So if you are somebody that understands what you're doing, please do your own due diligence. I think that's the first thing to say. I also don't do get rich quick schemes. I do not day trade. I'm not a scalper. I'm not in and out of trades constantly. I think the best way to describe my style is that I very much a trend follower. I'm really looking to hold positions for weeks to months at a time, and I use technical analysis to provide me with my thesis on any given stock, ETF, whatever. So I'm registered with the CMT Association, working towards my chartered status at the moment. So yeah, technical analysis is what I'm widely known for, and it's my thing, and that will become apparent in about 2 seconds. But if you are somebody out there that's struggling, feel free to stick around for a couple of minutes at the end. We might be able to help. I know there's a lot of you struggling at the moment. There's a lot of you that are paying for tuition in the form of losses, etc. So hopefully you get some insight. And as always, there should be a little subscribe button now in the bottom right hand corner. So feel free to check that out. But let's just dive into the charts. Now, I highlighted this chart last week. Now, despite what we have seen on Friday there, which was obviously a great day in the market, the days leading up to it, not so much. What we have seen is we've actually seen further declines in the number of stocks trading above their 200 simple moving average. Last week we were sitting at 68%. This week we're down to 57%. So although a lot of the top performers, the household names, have been holding up okay, there's an underlying issue here that I don't feel like is being picked up. I think it's being missed by a lot of analysts. And although it's not something that says to me, we're bearish on the market, I think far from it. We're very, very close to breaking out to new all-time highs. But it does ask the question, what if we're wrong in that thesis? We can also see there's massively declining momentum divergence, which is an issue in of itself. So I think the message at the moment is we're still in a bit of a sideways mess at the moment. I think the S&P 500 equal weighted index shows us as much. We're just hovering in the middle of no man's land. The Russell 2000 found support this week. I think those of us that understand technical analysis were watching this level with a lot of interest. I think a break below that level, and it was a bad situation just waiting to play out. We've got the S&P 400 mid-cap index. Again, it's just chopping about, doing nothing at the moment. I do feel like if the market is going to take the next leg higher, I do feel that we need the small caps and the mid caps to participate. That just seems logical to me. And I think if we get to a situation where the mid caps are ripping, then absolutely let's be aggressively long in the market. I think the message that I've been putting out to my clients this week. And in actual fact, this week I've presented my clients with some short opportunities for the first time in a long time, just in preparation for any potential downside that we might see. But, as always, I'm a bull at heart, so I do hope the market continues on its path that it started on Friday, and hopefully we break out to new highs. That's absolutely what I want to see. Now, this is a chart that I picked up on social media during the week, and this is an ETF which, as you can see, the basket of stocks within this ETF is fairly significant. The problem was that we broke down below a very key support level in the market. It does look like it's retesting this at the moment, but I do want to draw your attention to this here. We're looking at a moving average crossover. It's not a bullish crossover. That's the first thing to say. Now, this alert doesn't necessarily mean that we're going to drop. It just adds another layer of consideration for us. So, that's certainly on the radar. I'm watching the internet ETF very, very closely at the moment. Triple Q, again, not much has changed. We're chopping about sideways, and there's not a lot going on. Financials had a huge dip at the start of the week. It's kind of recovered a bit on Thursday and Friday there, so it'll be interesting to see what happens with JP Morgan, which we had a failed breakout. We've obviously had a breakdown, and it's going to be mega interesting to see if this recovers or whether we fall away. I will not be bullish on JP Morgan unless we're above this level, and that's just the technical view. Again, Goldman Sachs broken down. It does look like it's found a logical level of support almost immediately. So again, I'll be watching this level with a lot of interest. If we get above this level, then absolutely let's resume our bullish stance on Goldman Sachs. But at the moment, I think it's very much caution is the way forward. American Express. Now, again, very similar, and this was a stock that I highlighted the other day actually, and just basically saying, look, we're breaking below a key level of support and resistance here. Now, we do generally give it 2 or 3 days in order to prove us wrong and to recover. Now, that might well be holding true. So Monday is a big day for American Express. I think if we break above it, then I think you can resume your bullish stance. But below it, if we get a complete rejection here and it falls away, I think it's a potential shorting opportunity. American Airlines is in a bit of distress at the moment. There's a long-standing support level that's dating back to July 2016 here, and it's just logical to me that if we break below that support level, then you could probably tuck American Airlines to bed for a little while. It's obviously on a bearish downtrend at the moment, and it's never a good thing when key support levels break. So I think the American Airlines, if it's not on your radar at the moment, you might want to just kind of add it to your watch list. Disney is showing signs of weakness here. There's a chart pattern playing out, and it's going to be interesting to see if this drops to 122. I think if we get a support level here, and absolutely, I think it's probably a buying opportunity if we get a definitive bounce. But I think at the moment, Walt Disney, there are far better charts out there to be trading, in my opinion. I don't know what the dividend situation looks like, but I know that fundamentally there's a lot of increased competition with the streaming services now. And I think the issue there, it's not just a technical story anymore. I think there's a fundamental story there also. And that holds true for Netflix as well. For those of you that don't know, I've been bearish on Netflix since we got a rejection way up here. That thesis has proven to be absolutely correct. And again, we broke a long-standing support level here. So at the moment, I am still bearish on Netflix. Yes, there's been signs of recovery this week, but the trend is still down at the moment, unfortunately. I think for those of you out there that maybe follow my work really closely, you have my absolute sympathies. I know what it's like to bag hold, etc. I'm not here to say that you've made a bad decision or anything like that. I've just got my own technical view, which is logical, and hopefully it recovers and moves to the upside. But I think at the moment I am still bearish on Netflix until price tells me otherwise, and hopefully that thesis changes next week. Starbucks, again, this is a chart I picked up on social media. This is a logarithmic chart. That's the first thing to say. Now, there have been sort of over the last couple of weeks with Starbucks, I've included it in my analysis. There's been a bearish flag in there. We've had a rejection at support and resistance. And with the log chart, it does look like we are breaking down again with Starbucks. Now, how far it drops, I've absolutely no idea. I think what we just have to say at the moment is if you are looking to buy the dip in Starbucks, you should maybe do it with a little bit of caution. Yes, I love coffee just as much as the next guy. I love a Guatemalan blend as much as everybody else. But I think for me, the stock has just become unappealing now. I think again there are many better options out there. MasterCard. Now, I think this is the level to watch. Now, again, very similar to a lot of stocks that are showing a lot of signs of weakness at the moment. I think if we drop down towards this level, I think we can remain bullish above this level, bearish below it. So, if we're above this level, it's all good. I would like to see it recover and move back up and start to test. Good couple of days there on Thursday and Friday, so long may that continue, and it'll be interesting to see what happens with MasterCard. I think the trend there kind of speaks for itself at this point, so hopefully it's just a little pause in an otherwise excellent linear uptrend. Microsoft, again, showing signs of weakness, like a lot of stocks have done this week. There's a lot of stocks that have broken key support levels in the market. So again, I'm not really looking to be a buyer of Microsoft at the moment. I think if you were to say to me, Sam, where would I be looking to buy? I think if we were to get a confirmed breakout above this level of resistance, then that might be the catalyst for me to say, do you know what, let's go with Microsoft. I think at the moment it's just not appealing, guys. So, for the the tens of you that email and message me about this one, I get it. It's a popular stock. It's a huge tech company. It's not going anywhere. Great company, but technicals is my thing, so that's really where I would be looking to buy. Facebook, my chart has been updated this week. I think this chart seems to make a lot of sense for Facebook. So I think the message here is we are bullish above this support, and I think, excuse me, I think below it, I think this is the level to kind of just be mindful of, where you may wish to reconsider your stance on Facebook. And absolutely, I think if we ever get to a scenario where it drops below 160, then that's likely a problem for the whole market. But I think at the moment, you can still technically be bullish on Facebook. Now, McDonald's was, lots of questions asked this week with McDonald's. It's held firm. It's doing well. Obviously, another solid company. I get asked about it a lot. So we're in this very tight trading range at the moment. So for those of you that are maybe tempted to, buy at the bottom end of a range, you always need to consider what the size of the range is. Now, the reason I'm highlighting it is because there was a chap that asked me this week. For me, it doesn't represent any kind of risk to reward proposition. I think it was very clear that, if this support level was to break, if we got follow through on this red candle, then that would have been a problem for McDonald's. But as it stands at the moment, it's kind of recovering nicely. So I think if you're looking for a new entry, you'd probably want to take a breakout here or up here above 220. Big questions again asked of PayPal this week. It's going to be very interesting to see what happens next week. We've got a declining 50-day simple moving average, so that's a problem in of itself. We've obviously got a support level that price is flirting with at the moment. Remember the 3-day rule, you give price a couple of days below support to maybe prove you wrong. So that's held firm, but we are still in a bearish environment for PayPal. I think that's the first thing to say. yes, great company. They're all great companies, but I think you just have to observe where the danger zones are on the chart on a technical level. And I think with PayPal, that just makes a lot of sense to me. AYX is a stock that a few of my guys have profited on massively this week. Um, this support level, which was highlighted last week, has held firm. We've had a move to the upside in the last couple of days. And yeah, it's been profitable, 10-11% move in as many days. Lots of profit to be made there. So hopefully a lot of the cloud tech stocks will now start to recover, but I do feel that we need to have an advancing overall market in order for that to hold true. I think at the moment, be super selective with your positions, and hopefully AYX continues on its merry way. Big questions again asked of Adobe this week. We dipped below that 200 MA. And again, although it's a great company, great tech company, etc., all the great companies fall when we deal with things like corrections and so forth. So, these are the levels that I will continue to monitor. It has recovered, so I think we can be bullish above this level here. As long as this level holds true, then I think you can be a buyer of Adobe. But again, it's about understanding where the danger zones on the chart. And I think although a lot of the charts that I'm presenting to you are exceptionally clean, they're easy to understand. You also need to understand that there's a lot of technical analysis that's going on in the background. The reason that my charting is as clean as it is I'm a minimalist. So I just pick out what's relevant, what's not relevant, and it just helps to make functional, better decisions. Um, there's a lot of technical analysis that goes on here. I don't want to give the impression that technical analysis is massively easy, because you do need to put in a bit of work to kind of get to this level. I think Boston Scientific, again, we've had a bounce off the 200 MA. Questions been asked. So it is holding firm at the moment, but it will be interesting to see what happens when it gets back up to around 41.50. I think that's the level to watch. I think if you get another rejection here, then that might be a problem, and you might see further weakness. But absolutely for me, if I'm looking to take a position, I'm probably looking to do something like that. I think that just makes a lot of sense. Just getting in above very key level of resistance, and hopefully it goes on and creates new highs. Um, Electronic Arts, again, it's this Fibonacci level is holding firm at the moment. So I don't see any reason why we would need to change a bullish stance. I think if we drop below this level, however, I think that's a problem, and you'd probably see that come down to test 73. But I think at the moment, I think you can probably be bullish on EA, but it's not a chart that kind of holds massive appeal. Um, Berkshire Hathaway, I think there's a lot of you out there that are just patiently waiting for a breakout or a breakdown. Obviously, it's Berkshire Hathaway. I don't really expect to be shorting this stock anytime soon. If the market is going to advance, you would expect Berkshire Hathaway to participate in that. So yeah, I think if you're looking to get in here, it doesn't make a lot of sense to get in when price is in the middle of no man's land, but we are funneling in, and it does look like there's an entry to be had on any potential breakout above that level. Procter & Gamble is the gift that just keeps on giving. These are the types of charts that I like, where you could just delete all the analysis and just have price. That just makes sense. I don't know about you when you're looking at that, but that's a nice, healthy, clean, linear uptrend, and that's absolutely what we want to be seeing. Roku, I think probably is taken over Square as my number one messaged about stock. Now, again, for those of you that don't know, I've been bearish on Roku since we had this bearish flag here. Then I highlighted to everybody on social media, I said, look, don't jump in here. This is a potential dead cat bounce, which is what we got. Now, the question that everybody is really wanting to know is, are we dealing with another bearish flag here, or are we dealing with a rounded bottom? Now, we don't know. Technical analysis just helps us to obviously, facilitate good decision making, but it doesn't give us a crystal ball into the future. What it does allow us to do, though, is react to what happens and what happens with price. So I think if price breaks out to the upside here, then I think we want to be buyers of Roku. That's just common sense. However, if you're in the stock and you see a break below this level, you might want to reconsider your thesis. Again, that just seems logical to me. We've not reached oversold conditions. Those are characteristics of uptrends, not downtrends. So that's something to take as a positive, but I am very much watching this at the moment to see what the next move with Roku actually is. Semiconductors and NVIDIA, I think it makes a lot of sense, and this is my chart, and it has been for the last couple of months. For those of you that have been asking about this one, I think there's just a bit of patience to be had here. We're making a series of higher troughs, so we are in a bit of an uptrend at the moment, but it's kind of grinding sideways. It's not a Procter and Gamble, for example. So yeah, I think a little bit of patience is needed maybe with NVIDIA. American Waterworks, very clear profit target up at 130 there. Very clear support level in play. The 50 MA does look like it's holding firm as support. So it is very logical to me that we go on and we test this 130 level. It's had a big day today. So we'll see what happens here and whether it can get up to the 130 level again, at which point we would reevaluate our thesis. Now, Etsy is interesting. I've highlighted this one the last few weeks, and it does look like we've got a chart pattern forming here. And if that thesis does hold true, then it would be logical to aim for this level up here at about $70. Now, that's obviously a good bit of potential upside there. You're looking at about 22%. So I think if you are bullish on Etsy, absolutely. I don't think the chart itself is massively appealing, but if chart patterns are your thing, if you understand the work of all the classical chartists, then that chart pattern there might be favorable for you. Cisco Systems, again, watching this level with a lot of interest. I think now, in actual fact, we can probably delete that. And I think it's very, very clear. I think above this level, I think we can be bullish on Cisco Systems. I think below it, not so much. I think that would present a bit of a problem, and you'd probably see this move to $40. It's obviously taken a bit of a beat down over the last few months. Obviously, again, decent company, but it doesn't matter if it's a decent company. It's the stock price that pays you a profit, and the stock price at the moment is obviously going down. But there is a little bit of light at the end of the tunnel for you bulls. I think as long as this support level holds true, then the logical expectation is that it starts to move further to the upside. We've had a breakout in Pepsi. I think positive earnings, and we're off and running. I think that's the message with Pepsi. Very clear, long established uptrend, and it's breaking out. So the breakout is above a key area of resistance. And I think if we get further continuation on Monday, you'd probably want to see that move towards 150. I'm being inundated with gold requests at the moment. Yeah, there's a battle going on at $1,500, guys. I don't know if there's much more I can say than that. I think once this battle between the bulls and the bears is resolved, we'll be able to get a clearer picture. Obviously, above it, we can look at all the gold ETFs, we can look at the gold companies, etc. Below it, we don't want to be part of any of it. So I think gold, if you're out there, watch that level closely. Now, Applied Materials, for full disclosure, I have a position in Applied Materials at the moment, and I'm hoping that we are going to be rewarded with a nice cup and handle breakout. That would be nice. And I think the level to watch for that is around 52.50, maybe $53, and we'll see what Applied Materials has from there on. Now, just because I have a position in the stock doesn't mean that you can jump in and immediately make profit, etc. You need to have a full understanding of risk allocation, risk management, trade management, obviously the full technical side of things. Um, so yeah, I think if you're looking for a new entry into Applied Materials, I think this is the level to watch with a lot of interest. And we also have ABV. Again, um, it's just requiring a bit of patience, guys. I don't know if there's much more to say than that. A couple of you were asking this week about ABV. I think maybe because I've covered it recently in the past. Um, but again, there's no point in jumping in here and getting little gains. You want to be in stocks for big gains. You don't want to be in a stock for $1 or $2 moves. You want to be in stocks for 20, 30, 40, $100 moves. That's where the profits really are. And that's obviously the style that I have. And I think, as I said before, if you are somebody out there that is struggling a little bit, you can maybe stick around for a couple of minutes here. I think with the analysis, if you found some insight from this, if you've enjoyed it, again, please do subscribe to our channel. We try to upload once, maybe twice a week maximum, uh, offering our thoughts, etc. And it's proving to be very popular. But if you don't know who I am, I'm Sam, and as I said before, I'm working my way towards my chartered status for technical analysis, which is a huge deal in the world of technical analysis. I'm super well known for what I do, but ultimately the CMT designation is the gold standard, and that's what I want. So that's what I'm moving for. Now, I also run honeystocks.com, trading school, technical analysis school, whatever you want to call it. But I'm often asked the types of individuals that I can help. Now, I think the first thing to say is I can't help you to be a better day trader. That's just not my style. I think if you want to move away from day trading, I think if you maybe have a career or a business and you're maybe trying to fit trading around it, I can probably help you in some way. Maybe you just want better consistency. Maybe you want to learn this stuff for yourself and not just follow others. Maybe you want to trade with minimal stress, and maybe you want to align with a super successful trading group as well. Those are all the types of individuals that I can help. Like I said, I don't do get rich quick schemes. Now, the, the good thing about what I do is I think the best the best thing that anybody can do for you is help you to build a rule set and a trading plan that will last you for the rest of your life. And that's really what I work with clients to do. The good thing about what I also do is by being part of the honeystocks.com client group, you also get access to all my trade ideas, my charting, my client only analysis. What you have just watched is just a small fraction of the charts that I provide my group on a weekly basis. I have a client only analysis with all the best stocks. The charts that I've presented to you are simply the charts that I get requested most from all my channels, as I said before. And you can go through and I log absolutely every chart that I post to my client group for complete open transparency so that anybody that's maybe interested in learning from us, you can go on, you can see the types of stocks that I'm recommended, and you can make sure that those types of stocks maybe fit within your own approach, your budget, etc. I find that it's a good way to kind of give an introduction to kind of what I do, because many of you at the moment will absolutely be learning from losses. You'll be paying the stock market tuition to Wall Street, and that's never fun. I think with the individuals that I've spoken to over the last few years, it's soul destroying. I've had individuals cry down the phone to me. I've had clients inquiries, just individuals on the verge of breakdowns and so forth, and it's horrible. I totally understand it. So if you are somebody that's maybe learning from YouTube, you're just floating around social media, you don't have any consistency, you'd like to have a bit more consistency, then I think we can probably help you to not be swallowed into the Wall Street black hole, which is ultimately where most traders end up. We genuinely believe in making a difference at honeystocks.com. You can jump onto our website, you can have a look at all our client testimonials, you can see what we're all about. And we have helped so many people over the last couple of years. Um, you may not know this, but today is actually the 2 year anniversary of when I set up the website. And to date, I've I like to think that I've helped 80,000 individuals who have come on and checked out the website and so forth. But I have an incredible client group, some super inspirational, successful traders that do it week after week, month after month. And that's the best thing about what I do, is watching the success of others. I'm addicted to it. So if you are somebody that maybe wants to learn a new way, you want to get away from the old style, it's very, very simple. All you need to do is jump onto our website at honeystocks.com. You can check it out, choose a time. If you want to speak to somebody, if you are somebody that's truly struggling and you're determined to turn it around, then feel free to jump on. I'm going to be open up my calendar over the weekend, and I know that most of you guys are based in the US. Now, I think the other thing to say is that I'm going to be working from Asia in a few weeks' time. So, for those of you that maybe do want to get in touch, I know that many of you want to speak to me, but the time difference between here and London is a bit of an issue. Um, I'm going to open up the calendar fully for the next few days. And, if you do want to speak to me, I think now would be a good opportunity for you to do that before the calendar is reduced again because of the time zone with Asia. So, absolutely. If anybody has any questions, again, feel free to reach out to me via any of my social media channels. But if you've stuck around to the end, thank you very much for watching, and maybe I'll speak to you soon. Thank you.